Aishwarya Dadhij, founder and CIO at Fident Asset Management. Gentlemen, lovely chatting with you this Thursday morning. Things are looking pretty okay after the kind of badgering we've had both in IT stocks, even markets as a whole. Aishwarya, let me come to you first. Overall sentiment, do you think it's improving, or would you say that it will remain, a little iffy? Because technology names did see some buying yesterday, and overall as well, globally, we've seen some bit of stabilization coming in. But will the concerns play out or keep playing out going forward, both on the trade deal, trade developments, and the AI fears?
Good morning, Nita, and good morning to all the viewers. Obviously, Feb, as what we witnessed from December, January, has also been very volatile. But what I have seen in this month so far, that couple of things which indicates towards some positivity. We fund managers are always biased, we are more optimistic and we always try to find out things which can take us forward. But if you look at a couple of data points, which I believe is very interesting. First is if you look at the FI flows, after intensive selling in November, December, and January, Feb so far, we are seeing that FI inflow into Indian market there's a marginal positive uptake of 4-5,000 crore. This is despite of massive selling that they have witnessed in IT. I think in IT they have sold more than 10,000 crore almost last 15 odd days. So that indicates that the view about India is slightly changing. Even if you look at the derivatives short position, from 95% level of short, they are now inching toward almost 70-71%. So that trend is also changing toward the better. But what is really important is if you see the month of Feb so far, the broader market has actually outperformed the Nifty 50 or the large caps, primarily to do with IT, the way they behaved. But if you look at broader market, have given a return of close to 2%, Nifty mid cap 150 or Nifty small cap 250 is almost 2%, whereas the Nifty is hardly 0.5 or zero point 0.6 so far. And the reason for it is primarily the way these small caps and the mid caps have performed in this quarter. Like the Nifty 50 gave almost 16% kind of a pad growth. But if you look at the broader market, the mid caps and the small cap, I think there's a revival witnessed in this quarter, upward growth of almost 20-25% for mid cap and upward of 30%. And even if you adjust for some specific sectors, the growth is upward of 25%. So that interest is building up for the broader market, even by domestic as well as the HNI. So these are the signs, which tells us that global setup is not deteriorating. It's not improving either, but the deterioration is limited. India macro is in a sweet spot. What is really changing is the earning trajectory, and especially in the broader market. So if we see some stability going ahead on the geopolitical side globally, I will not be surprised, Nandita, to see some catch up in the broader market in the coming months. So that is how I see the market as we're standing.
Okay, expect some catch up in the broader markets. I mean, we'll talk about where to really, look for themes in the broader markets in just a bit. But let me also bring on board Chandan. Chandan, what's the setup looking like for today? Yesterday we had a green day, so to say, but we came off quite significantly from the day's high. And the technical analysts have been pointing out that 25,600 is a crucial level, and once if we close above that decisively, that's when the trend would be bullish. Would you concur with that? And today, what is your sense? It's Sensex expiry as well. Do you think the Nifty can make a dash at the 25,600 mark again today?
Good morning. Thanks for having me. So Nifty got stuck in a range from last almost 9-10 days. Multiple supports are visible near 25,325, 25,350, but at the same time, as you mentioned, hurdles are intact at 25,650, 750, or even 900. So market is just flirting above and below its 50-day exponential moving average. It requires follow-up buying activity. However, support-based buying is intact, but follow-up is required to change the trend. So we need to focus on a broader trading range, not expecting bigger downside, but upside also seems to be kept. So we need to play the range-bound bias of the market in between 25,300 to 25,650 marks.
Okay, and what's the trade for today? Nifty or Nifty Bank?
So I'll focus more on the bank Nifty, which is comparatively resilience, has been respecting above its rising support trend line with the hold of key moving averages. We have noticed that selective PSU banks are doing well and few private bank also leading from the front. So because of that, bank Nifty is finding support-based buying. However, it has been consolidating the range from last almost 7-8 days. But till it holds above 60,500, buy on decline is advised, and we are looking for an upside move towards 61,750. So buy on decline and more positive on the bank nifty than the nifty index at current juncture.
Okay, more positive on the bank nifty vis-a-vis the nifty, and of course bank nifty has shown resilience. In fact, the entire banking universe has shown resilience. But let's talk about some of the stocks in news as well. Reliance Industries was in focus yesterday. It was the top laggard on the nifty. Slipped quite a bit, almost 2% cut. There's some bit of news flow around Reliance Industries. It has completed a significant ownership restructuring in its step-down subsidiary, Reliance Enterprise Intelligence Limited, following a share allotment worth 853 crore rupees that formalizes a strategic partnership with Meta Platforms. Now, Reliance Enterprise Intelligence has allotted shares worth 596 crore rupees to Reliance Intelligence and worth 257 crore rupees to Meta Platforms arm Facebook. Now, Reliance Intelligence holds 70% stake in REIL, while Facebook will hold somewhere around 30%. Aishwarya, I want to come in, to you and ask you a question about the entire oil and gas space in particular. Crude prices have, of course, climbed past that 70 level and it is holding up above that 71 level. But if you look at the entire energy basket, both OMCs and upstream oil companies have managed to do well. How would you play this entire space now? Would you still look at OMCs or would you prefer upstream companies now?
So obviously, the last 3 quarters, the performance of both upstream and OMC has been pretty steady in spite of all the volatility that we have witnessed in the crude prices. And if we see forward, the probability of the predicting crude is very difficult because of the ever-changing geopolitical scenario, right? We understand that this Iran issue is ongoing, and if there is any fallout, we won't be surprised to see a temporary spike in your crude and Brent prices, and that will obviously have the impact on the OMCs there. So I would suggest that because the underlying thesis is so volatile or difficult to extrapolate, we would advise investors to stay away from taking any small view bet on any of these companies. Because I believe the geopolitical scenario or the way the crude will behave is very, very difficult to comprehend from here onwards. We understand that the ability to maneuver the volatility of the crude prices, both by upstreams and OMCs, has been pretty decent, as we have witnessed in the last 3 quarters. But it's going to be a difficult take over there. So in oil and gas, I believe one way of rather playing that segment is somewhat to get into Reliance Industries rather than playing through any of these PSUs, because Reliance is better managed and they have other assets to diversify, which is just not dependent on crude prices. And talking slightly on crude, we believe the slowdown in the global GDP, if we witness the slowdown in China, we can't rule it out. So there's become a tussle or war between, how the Iran thing pans out compared to how the growth of China will play out. So I'm closely watching on China, and I think there will be an overwhelming impact of it on crude and obviously on oil season. So my suggestion is to stay away.
Okay, stay away from some of these oil PSUs, but of course Reliance Industries is a diversified play. So better to play this space via this company, and that's the thought from Aishwarya. But let's talk about the technicals as well. Chandan, what are the levels you'll be watching out for on this particular stock, Reliance Industries, given the fact that yesterday we saw a sharp cut? So do you expect the stock to go further down, or do you expect some bit of buying to come in at these levels?
I believe Reliance would be in a broader trading range. However, in last couple of days, it witnessed profit booking and call writing near higher strike, witnessed some consolidative move with writing at 1440, 1450 strike, but at the same time, support was intact at 1400. So only concern was to break the 1400, but good part is the expiry got over because earlier it was witnessing sustained put writing at 1400. So now level might slightly slip lower, which can take it to 1360. So I believe 1360 to 1440 could be the range for Reliance, and it might be in a broader, slightly negative to range bound bias kind of setup for next couple of days from current level.
Okay, that's the view on Reliance and 1400. That's crucial level to watch out for. But from oil and gas, let's shift focus to the pharma space as well. Zydus is launching semaglutide injection in India upon the patent expiry. Yesterday, there was some news flow around Dr. Reddy's as well, and there was a city note wherein they were concerned about how big the opportunity will be for Dr. Reddy's in Canada, and they of course have been maintaining a sell call on Dr. Reddy's. Aishwarya, your thoughts on this whole semaglutide opportunity for pharma? Which are the players that stand to benefit the most? Because post Revlimid, this was supposed to be the big opportunity for some of these pharma names. So, what are your thoughts? Which ones do you like?
Yeah, so that is a very, very interesting area, and I think we did one detailed research on this particular segment. But what I understand, even if you look at the IPM data, the quantum of growth which is witnessed in this particular product is what is leading very strong growth in the IPM per se. And Zydus obviously is coming out with this product which is comparable to what Ozempic or Wegovy product that is there. And I believe there is a huge, growth opportunity in the whole space. But we at Fitent are not very, I would say, bullish on this scenario, given that the players that they're trying to enter will really see that move on valuation prices also. So if I really look at, we are more positive on the CDMO space, and the CMO space will be the supplier to a place like this. So we are categorically staying away. Like if I put an analogy to this, if you remember what happened with EV 7 or 10 years back, there was so much of excitement. But if you see the last 10 years, not many investors has actually made money there, right? Same happening with, possibly will happen with AI stocks, or I think will play out for, I would say, the data centers and things like that. So even in this space, I believe one has to be very careful. So we would be, not very excited on that space, because we believe that not many right companies are able to get that market, or possibly, there is a clean trade which can put that throttle of getting alpha for investors. So one has to be really in wait and watch mode, see which companies are really making it go, and then take a call rather than just jumping on those trades very early. So I would be watchful there. We are playing at Fitent, we are playing through CDMO. We got into some of the names like Loras in our portfolio. We got into players like Aquitas, which though are not really related to semi-glutide chemical and all that, but have created wealth for investors. So I think one has to be very, very watchful. This is more excitement, more narrative, but lesser money-making opportunities.
Okay, that's the view. Semaglutide, not so much excitement, at least when it comes to Aishwarya. He likes the CDMO plays. Chartically, what do you like? Chandan, would you look at some of these names like Laurus Labs, etc., Divi's as well for that matter, or would you stick to these generic players like Dr. Reddy's, Sun Pharma, etc.? Lupin as well for that matter.
Yeah, so yes, so preferred pick will be Lotus Lab. It has seen a consolidation breakout on the daily and the weekly chart after the consolidative move last 25 trading session. It gave a decisive hold above 1045 with surge in trading volume. So I believe buying interest could emerge here. And this is one of the strongest counter which really rallied well in the last year and now has been finding buying interest on decline. So with the support of 1050, it can head towards almost 1130, 1140 kind of level. Apart from that, we are quite bullish on counter like Lupin. One of the strongest name which is holding the gains, has been making high tops, high bottom on the monthly chart, all set to head towards its all-time high of 2400 marks. So buying is advisable in Lupin with support of 2250. It can head towards 2380 to 2400 kind of level. So Lotus Lab and Lupin could be two preferred idea if we need to pick from the pharma space.
Okay, those are the picks from the pharma space, Lupin and Laurus Labs, and additionally Aishwarya is bullish on the CDMO end of the pharma universe. But just quickly take you through 2-3 more stocks that have been focused before I come to trading ideas of the day and a compounding idea for the day, for a compounding idea, not for the day, but for the coming few years. But let's take a look at some of the stocks that have been focused. Sanofi India, that has reported numbers, and the numbers aren't all that great. Net profit down 32%. Revenue down almost 19%. EBITDA also, shed somewhere around 20% on a year-on-year basis. And margins came in lower at 21.6% versus 22.9%. So this stock will be in focus perhaps on the negative side. IRFC is another stock that will be in focus today. And not so great news because the OFS opened up yesterday. Government reducing 2% stake. It had a green shoe option of 2%, but it will not be exercising that because the response to the OFS hasn't been all that great. And today it will be open for retail investors as well. Additionally, the company has signed a loan agreement for $400 million ECB loan, external commercial borrowing, with SMBC and MUFG Bank. So this stock will be in focus. And aside of that, Shelly Engineering will be in focus. It has bagged an order worth 420 crore rupees from a domestic pharma company. But let's take stock of the rates at pre-open. We'll wait for it to settle because the Nifty is showing 180 points up. Let's just wait for it to settle a bit before I come to it. But Chandan, coming to you, any trades for the day? We spoke about your pharma picks. Lupin and Laurus Labs, but specifically for some trading ideas for the day for our viewers, what would you prefer?
So I'll pick one or two counters from the metal space because the sector is comparatively doing well. Major trend is positive, and after the recent consolidation, again, most of the counters are witnessing buying interest. So Tata Steel could be our preferred name, which has been making high tops, high bottom on the weekly chart. We have seen better rollover. Put call ratio of the counter is higher with put writing at lower strike. In fact, we have seen the better roll cost as well. So one can buy Tata Steel with support of 209 for an upside target was 225. And apart from that, I believe Hindustan Zinc could be other name with support of 600. We can see an up move towards 645. So Tata Steel and Hindalco from metal and mining or zinc space can be the preferred idea for the day.
No, Chandan, you meant Hindustan Zinc or Hindalco?
Hindustan Zinc and Tata Steel.
Okay, Hindustan Zinc and Tata Steel, those are the two trading ideas for the day. But Aishwarya, any compounding ideas from your end for our viewers?
So I believe, obviously, just like since we are talking about metals, last 1 month has been pretty exciting. We have seen ferrous, especially a lot of this HRC and other CRC prices has inched up 18% in the last 1 month in India itself. In China, when the the production has gone down. In spite of that, we have seen spike of almost 1-2% on CRC. And even in non-ferrous, we have seen what is happening in copper and aluminum and all that. So obviously, there is some excitement on metal as a space, and there is a probability of better margin improvement of at least 150 to 2,000 rupees per ton for ferrous led commodity in the coming quarters. So metal can do better in the short term. But since you asked on compounding, I believe there are better opportunities in the market. We are very, very positive on BFSI space. We have witnessed almost revival in credit growth of almost mid-teens. I think the evergreen will start reflecting and we'll see much better numbers for NBFCs and mid-sized banks. And I would say there are a lot of assets initially highlighted that the growth in the small cap and the mid cap is coming to the center stage. There are many companies where we have seen that the valuation has gone down 20-30%, but the growth trajectory is improving, and that kind of thesis is looking very attractive. So if we just to give some example, a player like Office Space Solution, which is into co-working space, I have seen a sharp derating in the stock prices. But if you see that earning visibility, you can see almost 35-40% earning growth for the next 2 years with all the mix on the whole space and a beautiful GCC play on that. So and obviously we are owning this kind of companies at Fident, but then we are seeing a lot of these opportunities which can really compound money in the coming times. So office space is one area which is very exciting. We believe auto and auto ends is one other area which will get a lot of interest. We are very close to the February data, and we will see a very strong upward 20% growth for EV and two-wheelers. And a lot of these auto and companies has not seen major re-rating. So we are holding a significant exposure to TVS over the last 1 year, which has done well. But now we are thinking and buying opportunities in the small cap and the mid cap space in the auto and. So that is where, there's a lot of compounding story in data, and one has to start looking out now. And that's what we are trying to do here, actually.
Okay, all right. Auto and auto ancillary space. Of course, Vahan registration data also hints at very strong registration figures, right? So that's one space that saw very good traction yesterday also, and office space, as you mentioned, and of course the BFSI space also looking good. Resilience we've seen in that space, especially when the markets were selling off. In the pre-open, just want to take stock of what's really happening. Now the rates have settled a bit, so we are showing a 30-point uptick, 25,500, and the Sensex extremely flat. But looks like the broader markets will also fare pretty okay because advanced decline ratio is looking in favor of gainers. And some of these technology names are featuring on the gainers list when I'm looking at the Nifty names. So let's see. Let's hope that we'll see some traction in technology once again today. But aside of that, let's shift focus to some queries then. We haven't really taken stock of a lot of queries, and a lot of them are coming. So Chandan, let's start with you. Geetu Sandesh wants to know your thoughts on Paytm, and the time horizon is 1 year. Chartically, how would you look at it? The stock was up 0.5% yesterday, but in the last 5 days, we've seen some bit of selling pressure. But given the fact that the time horizon is 1 year, how would you really, look at this stock? If somebody has to get into it, is this the right time?
Yeah, so I think a very nice query on Paytm, and thank you, Gutuji. So if I look at the price behavior of last 5 weeks, it has been consolidating in a range. If you ask me on immediate point of view, it would be tough for counter to hold beyond 1200. But yes, here the view is for 1 year. I believe one should accumulate because this is something where the next gen business could do well if I look at the growth of the GDP as a whole. So major support is 1030. With that support positional point of view, this counter can head towards 1300 to 1350 if someone is looking for 6 months to 1 year point of view.
Okay, that's the view. I hope that answers your query. Geetu, please keep your queries coming in. We will, make sure that all your queries are addressed by our experts. But Aishwarya, coming to you, since you were talking about the entire auto space, Harsha Singh wants to know, your outlook on some of these names like Hyundai Motors, because this stock has seen very high volatility. Since you were alluding to autos and auto angs, and you can really look for opportunities in this space. But overall, in the auto space, would you look at the likes of Maruti, Hyundai, all these names, or would you look at two-wheelers, SUV makers for that matter? Which end of the spectrum should one focus on, especially now?
So, what we always focus on is growth, Nandita, right? And when we are looking at whether it is PV or two-wheelers or and CV, the growth is very visible in two-wheelers. That's why we were very positive and bought players like TVS. In four-wheelers, there are like four major players. If I put Maruti, Hyundai, Tata Motor, and your Mahindra. And if you see this performance of these companies over the last 4 to 6 quarters, Maruti has been losing market share, and same goes with Hyundai. But we have seen that Tata Motor PV as well as Mahindra is the one which has been seeing growth in the market share and with the right placement of products. And we have seen a lot of narrative and broha about many of those Mahindra's product getting acceptance, and same goes with Tata Motor PV products. So in that sense, and if we compare it to valuation, Hyundai is not cheap in spite of losing market share and lower growth. And same goes with, I would say, Maruti. So they both are trading at between 25, 27 time PE. And if you look at Mahindra, which is almost at the same valuation, though obviously we have to look at it on standalone because they have Tech M and MMFS and all of that part of their companies. But my thesis is very clear that let's stick with businesses which are gaining market share and which are showing consistent growth. So in four-wheelers, players like Mahindra, possibly Tata Motor at these valuations making more sense. In two-wheelers, we will stick with players, but I believe OEM, the alpha generating opportunity is slightly limited. What is really exciting is when we go down on the auto ang side. And that is where we want to play quasi growth on CV as well as PV, where you can see higher growth opportunities.
Okay, so that's the view, an overarching view on autos. Valuations wise, Tata Motors, Mahindras, they are better placed, and auto ancillary is where you can find exciting opportunities. Hope that answers your query, Harsh. But moving on to IRFC, Chandan, this stock has been in focus, right? In fact, railway stocks haven't really, have only been chugging along. They haven't really shown, great traction. But IRFC, of course, in particular, has been in news because of the OFS. Your Satish Narkar wants to know your thoughts on how one should navigate this stock. Any particular levels you'll be watching out for here? It's quoting at 104 right now.
So trend of the counter is negative. It has been making lower top, lower bottom on the daily and the weekly scale, and now all set to give the breakdown of last 3 years. In 2024, it made low near 98, and I believe it can go down below the same. So structure is weak. Better to avoid till it remains below 110. It can go to 98 or even 92 kind of levels.
Okay. Even 92 can be tested when it comes to an IRFC. Trend is on the negative side. So there's one data center play which has seen very, very good traction, NetWeb, and there's a query that's come in from Naveen, and Naveen has been he's been a viewer who's been sending his queries for a very long time. So let's get his query addressed. At these levels, what are your thoughts on NetWeb? Do you think the risk reward is looking attractive still? Because in the last 1 month or so, it has already rallied 20%. 3,650 is where it's at. But if you compare it with its highs, 4,479, that was a 2-week high. A lot of ground to cover. So do you see more upside here on, and should one look at riding this up move?
Yeah, so if I have to reply on this, trend is positive. We have seen recovery from lower levels. It took support near 3,000 and higher base is being formed at 3450. So with the support of 3450, it can head towards 4,000 to 4,100.
Okay, 4,000 to 4,100. That's the upside that Chandan is seeing on the charts. Hope that answers your query. But there's another stock, KEC International. For the long term, Alex wants to know, does it merit a look? Your thoughts, Chandan?
Yeah, so like here, I believe if I look at the price behavior, it has been making lower top, lower bottom, and counter is trading at multiple months low level. Trend structure is negative. However, risk reward ratio might favor, but structure is bearish. I believe more profit booking can be seen. Let it correct and settle near 560, 550 before we go for bargain buying.
Okay, that's the view on KC. Aishwarya, what is your perception when it comes to some of these AI data center beneficiaries in particular? Not just these players like NetWeb, metals, copper, etc., will also be beneficiaries of the data center boom, right? If you have to purely look at this end, the data center boom, which are the pockets that would excite you?
Yeah, so I think like riding this stock is like riding Ferraris, there's so much of excitement. And if you really connect AI and data center, I don't think there are really right names, many such opportunities in the listed space, right? We talk about E2E or NetWeb or Orient Pro and players like that,
Yeah.
which are creating some work related to AI or data center, either on the infrastructure SaaS side or on the product side on creating like on the agentic AI product side. But what we have been doing, I think it's always better to play proxy on these players. So when you are talking about data center, you would definitely need a lot of wires and cables and power. So what we are doing at Fident is obviously trying to understand that where we are seeing a lot of growth coming for wires and cables, which is related to data centers, and there are many great companies which are there, which are available at much more reasonable valuation, and which will be a beneficiary of this whole ecosystem of data center and AI and things like that. So we are positive on wires and cables. We are also positive on power, like we were talking about KC Internationals and other players. We believe that is one segment which is very attractive on valuations. You look at tower, the tower players, the transmission players, and all of that. 1.5 year before, when market was at ludicrous higher valuations. Though a lot of these companies were at 30, 40, 50 times. Many of them are now coming at below 20 time PE after the froth been taken care of. So those are not a very clear play of power helping on data center, but I think power is one area which can also be should be on the investors track. I would say to put money over there. But wires and cables is definitely one. And coming directly on data center and all, at we feeling we have identified player like Orient Pro, which is basically a beautiful play both between product and AI agentic play on of AI over there. And we have been evaluating other places per se, but I believe valuations has been a concern and investors should be watchful of that. So it's not always better to ride on high narrative stories at a high speed because the probability of getting and hitting is also very high there. So one, be watchful.
Okay, be watchful, but there are a lot of these proxies to the data center boom that you mentioned, and one should take stock of that. With that, Aishwarya, I would like to thank you for taking out time and joining in. Always a pleasure. But let's take stock of the market open. On that note,